Now, I know a lot of people got killed today on the S&P 500, so I want to take some time to briefly look at this as well as QQQ. There's a lot of people on Twitter who were very bearish on the market today. I was not very bearish on the market, but I did take a put position, which I'm going to close for a loss tomorrow. I took that position right when the Fed meeting had just begun at about 2:30. Jerome Powell was getting asked about the yield curve inversion and about bonds, and getting pressed a little bit on how they plan to potentially raise rates in December and how he felt on the economy and the jobs market. And I just overall believed that this was a pretty solid time to potentially go short or get SPY puts, because I just felt like it was overall that we didn't have enough bullish sentiment from him or bullish enthusiasm to actually warrant a push up. And so that's why I do think that there's a chance that tomorrow we could just sell off, because we've seen this in the past couple of Fed decisions where we get one movement on the day of a release and then the next day the opposite movement, which we've ceased to see yet. Post-market, we're up even higher, but we'll see how the rest of the day pans out, or I'm sorry, the rest of the night pans out. Now, looking at the S&P 500, you're going to see we had this big sell-off from 437.47, which we talked about over the past couple of weeks, and we were saying down here at this support level of like 412, that we thought we were going to see the market bounce, because there was so much selling pressure and so much volume sitting down here that there was no way it wasn't going to bounce. This is what's called a high confluent area. I talk about this a lot within my academy and during my private streams, because high confluence areas are some of the easiest places to trade, especially if you're somebody who's looking for a potential reversal. The reason for this is that it's an area that a lot of traders are looking at. You can see that if you're somebody who plays smart money concepts, we have a lot of order blocks. So you're watching this. You can see that we also have the volume profiles point of control. And all that are these horizontal gray bars that you see here on the right side of your screen. What they're doing is they're going to show us at what price levels have the most volume. And the whole aspect that we are always looking for is to try to get an idea of what big money's doing, because we know we can't move the market. I equate this a lot to a speeding train, right? When we were kids in Philadelphia, I don't recommend anybody do this. We used to go train hopping. And obviously, if you're hopping onto a train, you have no idea where the train's going. You can make some decisions as to, okay, I see the side of this says R2, so this is Regional Rail 2. I think it's going to 30th Street Station. I'm going to hop on it. I don't recommend you to do that, but you can make some sort of assessment as to where you think the train is going to go. But once you hop on the train and you continue to ride it and you start to see that it's going the opposite direction of where you thought you were going, the only thing that you can do is hop off. You can't change the direction of the actual train. And it's the same situation when it comes to trading. You can give yourself an idea of where you think the market's going to go or where you think a specific trade is going to go, but you have no control at all as to where it's going to end up going. So there's no reason to ever be mad at yourself or get upset about anything when it comes to trading, because at the end of the day, you can't actually move the market. And so in this instance, we have this high confluent area where there's a lot of players who can move the train themselves because there's a lot of volume. It's a high confluent area. We see this big bounce, and now we're watching for this potential rejection, because normally when we get a significant sell-off like this, we'll recover to about 50%, maybe 61% or 70%. But in most cases from there, we'll usually end up rejecting, which I think is going to be about 426, and moving our way back down to those levels that we had tested before at about 411, back down to $408.